As we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets, having been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone.
Ah.
You know,
but isn't that a good thing though? Because you have more liquidity.
No, it's a very good thing.
Yeah.
It's a very good thing. And, you know, and the fractional shares is given access to markets. Welcome everyone to the Kendall Report. It is Monday night, another positive day in the markets. Pretty interesting what's going on here. We just continue to see lots of surprises, and I'll talk to you about what I think are the surprises that are coming out. But anyway, sorry for being late again. We can blame this once again to technology. I use Streamlabs. It's been really giving me fits. They forced me to do an update, so I had lots of issues getting started. So I want to be on time. Trust me. I want to get on air and get the information to you folks so we can move on. So just real quick, just a reminder, you can still get the customer loyalty.com/indicators. You can still get that. Should recognize you as a previous buyer. If it doesn't, send us an email. We'll send you the secret code. So don't forget that as well. So one more thing before we get into the flow tonight is we're also remember there will not be a stream tomorrow night, and so we'll be back on Wednesday night, and so Wednesday, Thursday from here, and other than the markets just keep going up lately. There's not much more to talk about. There's really no news coming out tomorrow at all. Won't be until Wednesday. I'll talk about a couple of those things here in a minute just to kind of review going backwards just a little bit as we come into CPI Wednesday, and since I won't be able to talk to you tomorrow night on that. So let's just, probably the big news of the day, the big news of the day for sure is Tesla, right? Up 10%. Wow. So now Tesla is becoming an AI provider, a supercomputer provider. They're buying gazillions of the NVIDIA chips only to replace it with their D1 chip, which is probably, if it's like most things that Musk does, it'll probably blow away the NVIDIA market big time, but not sure they're going to be selling those out in the public. So, but it will change how what they're running. So yesterday, just real quick review. I had a couple of, we'll call them rants. I wish I had come back on camera for one of them. There's not my notes tonight that I have right here are virtually non-existent, other than We have no news in Tesla that came out today, but I went into a fairly big, I guess, rant about AI and what's going on here. And then Elon comes out the next day and basically confirms everything I'm saying. And, you know, I guess if I go down any trail, since there's no news, I'll go down this trail just a little bit tonight, as there's continuing to be some crazy stuff going on. Facebook Meta actually has released a new AI platform, and I'm not sure, it just came out, called Llama. And if you're a programmer, you're probably going to end up to love that. And I found out some other things, is that Meta has the largest AI environment that exists at the moment. So that's interesting too, because you think ChatGPT and Microsoft and all those fellows have got everything together, but that's not the case. There's a lot going on in this space, and it's not going to go away for a while. And in fact, just about anybody that lives on the planet right now is being affected by AI and some of its benefits. And I know, okay, ChatGPT traffic's down, other things are down, but it doesn't mean it's not being effective just because a bunch of bozos can't figure out how to use it. GPT was a big buzz because everybody was at least logging in and, you know, doing some really basic stuff. Now I think most of the things that are going on, especially in GPT-4, is really focused in on the programming space and all that. And I know earlier this year we used it internally to build a database to automate our entire billing and everything that we do here, which has been somewhat of a man in the middle and mechanical basis for decades. So it's already changed the life around here pretty substantially. So let's talk about just a couple more things. The indexes are, we've got Apple big meeting tomorrow. That's going to be something of a feature. Typically after Apple talks about their new products, they seem to get a pop and then a decline. I think what I'll do tonight, since we're really, I guess, slack on any kind of information, is we'll cover a couple stocks at the end of today. I should be able to buzz through things. We do not have the database to look at. I went through that quite a bit. I do just make a quick comment on the database, though, is I think we're going to see the daily database was 32% yesterday. We're going to see it move right back into that 37, 42% range very quickly, because we've seen a lot of volatility in these trends that are coming out on a short-term basis. So intermediate, still very solid, around 61, 62% bullish there. So the trends are still very alive, and you can see the whole expectation that was running around the street that, you know, the market's rolling over and it's going to collapse. I keep telling you folks, you want to be a good analyst, just fade the mainstream media. Just watch Bloomberg or CNBC for an hour or so, and you should be an expert. All you can do is say the opposite or do the opposite for the most part. There's probably only, on every given day, there's probably 3 smart people that come on that actually are worth listening to every day. I actually have it, Bloomberg on. I just look if there's some news or something. I try to tune in or something like that. But for the most part, you don't hear Bloomberg in the background because the sound is off. That's the best way to watch it, by the way. So let's just go through a couple other scenarios outside of Tesla's dojo operation that they're putting together. I think about the only thing that we're likely to see tomorrow is really just kind of a consolidation. We already see the futures backing up 3 or 4 handles as we speak right now. So I think we probably get a hesitation day. Then we come into CPI, and I'm going to set my expectations up for CPI and for Wednesday's action, since I won't be here to talk to you tomorrow night, is I'll at least be able to set up some ranges and some expectations. And I we'll go through those details. In tonight's video, I named it, will the new Fibonacci targets get hit? And that's really the big question. And the new targets would suggest that we're going to go to a new high over the previous high. And I'll discuss that in the technicals. But more importantly, I'm going to try to do my best to set up Wednesday's activity. Like I said, at the end, I should be able to buzz right through tonight. I don't expect any unexpected rants or anything of that sort. The thing that happened last night, I'm serious. I wish I was 2 seconds away from just turning off all the charts and just interacting. There was a great dialogue going on the timeline last night that really triggered me into a lot of stuff. That would have been a lot of fun, but we still managed. I did get into it, actually, and that's why we were hour and 25 minutes last night on last night's stream. So, things happen. I missed the old days back on Wednesdays back in 2020, 2021, when we were when I used to do my 3-hour broadcast on Wednesday afternoon, and those were really fun. I had there's a lot of good content in there and things that were said. The problem with these streams and the problem with the way I run this channel is that if you didn't watch the whole thing last night, you missed so much. If you just skimmed through the video last night, you missed some, I think, some really good nuggets, some good information, some good knowledge that came out of last night. It's unfortunate that I don't have someone that can pull those out and put it into a highlights video. There's a lot of that stuff every day. I've tried to find some folks a couple of times from the channel, and it's just really difficult for someone other than myself to recognize where those nuggets are. Anyway, so let's go ahead and get into tonight's video. Like I said, I should be able to spin through the technicals pretty quick tonight, and then at the end of things, we'll do 3 or 4 stocks and call it quits, and then I'll see you on Wednesday. So let's go ahead and get into tonight's stream. All right, so here we are at the S&P. This is daily. Let's flip this over to the hourly chart. I think this is getting fairly interesting again. Now, as I mentioned, we did roll over to the December contract, and so we dealt with the premiums yesterday on the rollover. And so now we're looking at, even though technically speaking, if you look at where the levels of the market is, maybe I should also just touch on bringing up the cash markets. I always focus on the futures, but those have always been, I guess, anyway, they've always been my main part of my trading. So that's why I talk about them every night. So, yeah, and in fact, when I go through the dailies, we will bring up the cash. I want to look at that myself. I spend way too much time looking at the futures. Sometimes there's some shares, some ideas there that really come out of looking at the cash markets as well. So one of the things that I've been talking about on this hourly chart, this upward slope just seems like it continues. It's almost like I want to use the meme to the moon. We just continue to move higher. In the pattern, as you can see, we're just steady upslope. Indicators are maintaining a decent level. We're looking at 0.25 on ppm1. I'm sorry, 0.17, and ppm2 is at 0.25 and ppm3 0.18. So this basic upward slope here is pretty substantial from that standpoint. I am going to go to the indicators here real quick, and I want to put the probabilities up here real quick, just to have them up there for a second. Bear with me 1 second. You see they're pretty high probabilities. Right now about 34% probability to penetrate through this 10-hour moving average, 42, 35, 18. And so we can see that we're really on that upward slope. And so you need to use these simple averages, no weighted, no exponential, no changes, just a simple average is everything that they're looks like they should hold here. And I'll try not to get in there, but Alex, I appreciate it. The 15-minute videos took me 3 hours to make, so this is how we do it now. So sorry, I wish I could just get these edited down as well. So I get it. So, and anyway, but we look at all the indicators, we look at everything that's going on here, and we're just completely seeing this market climb the wall of worry. We've got these are hourly charts. So Fibonacci targets on the upside here are 54, 67, 75. These are valid, and we'll have to see this market grid turn up. For the moment, we've got a little bit of a downward wedge set up, and the 21 period moving average in this pattern, this is hourly now, in this pattern is going to be the dominant, which right now 45.27. Let's go ahead and go over to the daily. And this is this pattern that we continue to see. I talked about the fib targets last night. These are the ones that I said, can we hit these? And I think there's a really good shot at hitting the 45.88 level, which is would be a new high in this pattern. And like I said, we're dealing with the premium, but it's still valid on a continuation chart. And that's the only way you're going to do long-term charts using continuation charts, whether they're weekly, monthly, or whatever that you're using. So we got to deal with them even on the short term as well. But we're looking at that key level right there at 45.47. We got up to 45.43, so we're pretty close. And I think we'll probably see the 88 number, 45.88. I don't see us, at least in the near term, getting to Fib target 2, which is 46.68. It looks, what the algos are telling us, though, is that this 21 period moving averages looks like it's going to continue to accelerate and into that magic time zone I've been talking about, right around the week of the Fed, around September 18th. I was looking at some things earlier today, and September 18th, 19th, 21, there's a whole cluster of events, crossovers on the PPMs that are being projected then. They could change because that's almost not quite 2 weeks out, but they could change, and it could end up to be fairly substantial when that happens. But everything's targeted on this Fed meeting. Now, just real quick comment is that I'm still sticking with the Fed will raise rates one more time, and I think that's probably the event that we're going to get. And I'm sure if they do raise rates, then everybody's going to come to the conclusion that that was it. And I'll talk more about that when we go through the interest rates here in just a minute. Let's take a look at the market grid real quick here for tomorrow. Matter of fact, I want to review yesterday just real quick, because one of the things that we were looking at is the potential for S1, R2. Well, we printed not quite S1, but we printed as high as R3 yesterday. We got up to 43. R3 was 45, 44, 17. So we made it to R3. I thought for sure we'd do S1, S1, R2. We come into today, we started looking at these numbers. Now all of a sudden S1 is 31. We're almost there. So 31 would be S1. R2 is 57, which would be that first Fibonacci target that I just talked about. So that would put us up fairly high. I take that back. That was 88 that we're talking about. So 57 is R2. R3 is 66. We could print up in there. The key level to watch for, and there's something very interesting happening here, and a lot of times this will at least trigger a little bit of a sideways movement, but the 10 period moving average is about to cross through the 40. Let's look at those values. 45.08 is the 10. The 40 period right now is 45.06, so it's actually crossed over tonight. And typically that could end up to be somewhat of a little minor consolidation or pause. But in this case, it looks to me that we're at least going to stay right at that area. So if we came down, the extreme on this pattern here, which would be really extreme, especially with no news tomorrow, would be an STX number, which is 45.03. But that 45.0603 number, if you saw that early on in the session, that would be a buy the dip moment. I don't see that happening, but anything's possible. So, but the range should be a solid S1, R2 tomorrow, which puts us 31. We're almost at S1 right now. We could go S2, R2, but just use those numbers as always. S1 is a pivot. We take that out and look for the 21 level. And if the same thing on the R2 level, 45.66 would be that number. And there also should be a surge just because that's taking out that previous high number that I just talked about at 47. Once we get above that, there's probably likely to be a little bit of a run for sure from that standpoint. Okay, so let's set up now. Let's talk about Wednesday, right? I said I was going to set you up for the numbers here. I think this is the key number here. And I keep talking about this. There's some crazy new fib targets out here that are all-time new high targets. 49.16 is the min on a weekly basis, but the 10 period moving average here, 45.05. So there's another number. Just talk about the 10, 21 period moving averages on a daily are 45.0306 range. Now we got the 10 week right at 45, and it's up at 0.22. So that's basically trend mode. So I would expect us to stay above that level. And if we look to anything, R1 is 38. We've already breached that on a weekly basis. So R2 69, we should be held no more than that. So that's what put us up around those R3 RXT numbers. So those of you with the indicators, and I would basically look for, when you get the update tomorrow after tomorrow's close, just look for, it's kind of running S1, R2. I don't expect anything to change, although we could start to get in a little bit more volatility as we come into Wednesday and we get CPI and PPI, and that's where the news really starts. So start when we get to that level. So just for Wednesday, when you get the numbers for the for the market grid on Wednesday's numbers after tomorrow's close, look for an expanded number, S2, R2 kind of range. Typically what we'll get when the news is out, we'll get that expanded volatility just a little bit there. All right, I'm going to do something. I don't normally cover the VIX, but I do want you to see this because I was looking at this earlier. This is a weekly VIX, and it looks like everything's going to stay in control for the moment. But let's go over to the daily. Same thing. We look like the VIX is going to top out around 15. I don't see it getting above that, and we're just staying in check here. And in fact, the key number is right around 1150 or so on a downside. So VIX isn't indicating any real big spike here at the moment. And I'm going to go back over to the weekly VIX. This is a VIX on the S&P. Weekly VIX has also got a cap right around 17 would be the extreme, but it's really, you just look at the market grid on the VIX for the weekly, that tells you about all you need to know. Is R2 15, 17, S1 13, 20. That's probably your range. And so far it's been 1374 and 1453. So there could be a little bit of a spike, but I think we stay in this very tight range here as we come in. If anything, there's probably more downside on the VIX than there is upside at the moment. All right, so the NASDAQ continues to have that upward slope. At another pretty good day. Looking at yesterday and looking at the market grid, we did print up to 15,696. We got R3 was, I said 16, 15,696. We're looking at R3 15,654, 15,703. So we got right in between, almost an RTX move yesterday. Coming into today, just like with the S&P, this is a daily chart now. The 10-period moving average is likely to be about where there's any downside. If it should hold around that level, 15,501. We look at the S1 15,626, 15,572, and 15,518 would be an S3 move. That would be about the extreme. And we are seeing the dailies, at least on the PPM1, trying to turn over, but PPM2 is accelerating. So we're starting to see something very significant. And you may recall just these three red dots down here. I told you that the likelihood of this being what I call an island projection, where there's one bar that it gets projected, the next bar it gets invalidated. That's exactly what happened in Monday's action, as we invalidated that downward projection. Now you just got to watch these SMAs on the 10 is probably all you're really going to have to see, which is 15,501. And to get to that, that would almost be an S3 STX move. So I don't see that actually happening in this pattern, but expect to see it continue to roll on there from the standpoint of where the patterns. And that so here's the weekly pattern, and just to set up for Wednesday, same thing as we come into Wednesday. Look for S2 R2 and a kick up of volatility when the CPI comes out. And as far as what the CPI is likely to come out, I don't think there's any surprises there. Everybody's expecting it to be up a little bit. I think 0.1 more than the previous month over month, and the annual numbers are still on CPI around 3.6 and on PPI around 2, but I'll be around to talk about that on Wednesday night before we get to that report. But basically what we're looking at here from the standpoint of the weekly chart, we're looking at so far we've been at 15,696. So R2 15,796 is likely to be the number. And like I said, we do have, we'll go through Apple and we'll look at Tesla, maybe a couple other stocks here at the end. So let's just keep rolling and take a look at the Russell now. So I brought up the weekly Russell, and this is interesting actually, because there was a new upward Fibonacci target there as well, which is 21. Let me get the exact numbers here. 21.29, 22.43, 23.14. You see these green dots up here. We basically satisfied the fib target one on this previous set. Now we have a new calculations coming out, and we have a major pivot number down here at the, I get the right number here, we're going to get, bear with me one second, I just got to find this number. It's going to be around 1702 on the downside. That's like way below where we are, so that's really not in play. The only thing that is happening here is we've got the 10-period moving average. This is the weekly. That's going to be your cap, and you have downward slope on the market grid on the weekly as well. So expect that to be capped off around R1's 1865, 1880. So far we've been 66, so we've hit that. So look for 1880 probably to be a cap on the Russell. Let's bring up the daily just fairly quick here. I mentioned this last night. We do have the downward projections here, but it looks like everything's stabilizing. PPM2 is about to turn up. That's going to be enough to probably hold this market in this pattern here. And 1876 is your resistance point at the moment, but once we get above that, then those numbers I talked about on the weekly would be fairly likely. All right, I should have brought up some of the stats, but I did see a couple of the auctions. I mentioned last night there's quite a few auctions coming out. Today there was, and tomorrow. We still got great coverage on these. You know, folks are always trying to, where's Fitch and where's Moody's? You know, they disappeared. I told you some time ago, all they were doing is trying to capture some headlines, and they did a pretty good job. Yeah, you always wonder who was short the market before they started throwing those numbers out there. Those bogus numbers that those people put out and those bogus reviews. I mean, anybody that didn't know the United States of America has some crazy high debt right now, and all of a sudden it became a problem on some Tuesday, some Thursday, whenever they release that news, is really quite laughable. And, markets still have this crazy demand for treasuries. And it doesn't appear like it's unshakable, so it looks. I've always been quoted, and matter of fact, from, like 5 years off and on, I've been saying, hey, we're one bad bond auction away from disaster. But we have a couple that maybe the coverage is off a little bit, but we've never really had a really bad bond auction. That's the one where virtually nobody shows up. They can't even cover the auction, and the tail is like some monster 10 or 12 ticks, and everybody's running for the hills, and the bond vigilantes are screaming, we got them now. And that just hasn't happened. And, there's been moments, having grown up myself in, I started in the markets in 1979 and getting to, 83, 84. There were moments in the bond market, folks, that Henry Kaufman and there was another guy that was around, big analyst. They could just open their mouth at the time. And the futures used to have these limits that they would go, and they would just take them limit up or limit down just by a simple comment. And the volatility was huge. And, and back in those days, in the early 80s, I was an institutional bond trader. So I was pretty focused on all of that stuff. But we really, even then, there was decent demand. There were spots where it seemed pretty crazy, but it always seemed to stabilize. And who wouldn't want? I had a conversation with some folks the other day, and who wouldn't want to buy a 14 3/4 coupon with a 30-year maturity with the first call at 20 years in 1980, 81 or 82, somewhere around there. You can get a 15% guaranteed by the U.S. government. Who wouldn't want that? And in fact, the first day they could call those bonds, they did, like some 20 years later after that date. I think it was 2001 when those bonds were called. And all I can tell you is that was the deal of a lifetime. That was a trade of a lifetime to get 15%. And those bonds actually traded. They were trading discount. You could have bought them at a 16% yield. And believe it or not, they were trading at $96, $94 roughly at the extremes, that same 14 3/4 coupon. And they traded as high as 197 about, I think it was about 6 or 7 years ago. After that, maybe in 1988, maybe even early, around 89, because there was a little mini crash there. The reason I tell you that is that even then and through all of that, there was always demand for Treasury. So, and all the talk of the BRICS and the Dow is going to lose its, that's just talk. And, for right now, the markets, the world is not positioned in a way to take away the Dow dominance and the need for Treasuries at the moment. All right, so little mini rant. That's it. So let's look at the 10-year here. Little bit higher yields. We got up to 427 on the 10. That the high was 430. The highest that we've been in this little sequence here is 430.6. So we're punching up towards that. The highest that we've been is at 436.2. And it looks to me, just looking at the algos, that this was, I talked about this in the last several streams that I've done, is that the Treasuries are going to stay pretty much within the bounds of these market grid at the moment. You'll see, if you look at the market grid, there's approximately, and this is pretty standard for those of you who have the indicators, is only about roughly, we've done these measurements on the S&P, about 12% of the time does it ever go above or below those projected values for the next day. So this is, yesterday's a pretty good example of that. The high on the market grid was 31.15, R3 30.02, and we went to 4.30 exactly. So basically it was an R3 move yesterday, but we're going to stay within these parameters. The other thing that's happened, and I've talked a fair amount about this when it comes to the market grid, so this is a teaching moment, is that when the market grid starts to contract and get narrow and flat, we tend to have more of a downside risk on that market. So in this case, there's probably more of a test of the moving averages coming into play. 420 is the 10. So there's probably a little bit of bias to the downside, and it doesn't look like we're getting any volatility expansion. None of those things are happening. And you can look at the algos here down below. The 10 is somewhat stable, but look at 21. Looks like 2140. Everything wants to roll back and ultimately maybe get down to these Fibonacci targets that are in this pattern, which are really around the 411 area. 410 would be the extreme. I'll take that back. Fib target 2 is way down at 401. Not going to happen, but that Fib target 1 would put us down to the 40 period moving average. That number right now is at 410, and that Fib target 1 is right at that level, that 411, 410 area. So we should be constrained. I think we stay above these moving averages for the moment, around 420 on the 10, the 21's 422. That's going to be rock solid, I believe, at the moment. but the indicators are suggesting, and this is interesting as we come in, once again, this is the daily. If we come out here and let's move over to Monday the 18th, it looks like they're getting down to whatever happens in here is that they're going to be at the extreme, and it looks like they want to try to uptick. Now these forecasts are going to change as we get more data day to day, because we have I have the coefficient set on these algos at 150. That's one of the better numbers to watch, but we shouldn't, like I said, this should be the setup. It doesn't look like anything can happen beyond one thing. I keep showing you this pattern, and I'm even going to take the trouble to draw this in real quick. So let me bring up my drawing tool. What I want you to see is basically this little range. I think we could get back in here for, let me draw this a little bit better. Let me do two things here. All right, so this, where these moving averages come in, this is very typical where the market will trade back into those averages. So we come back in and we come into this wedge, and I'm trying to get this. So we come back in where the markets drop in. I don't know why it won't let me grab the tool I'm trying to grab. They try to come back into this range here, and we get stuck in that little wedge. I've been talking about this wedge for a while here from the standpoint of how moving averages work here, but you can see PPMs are all looking like they want to come down. The only one that's solid is the 200, but it's really out of play. It's way down here. So like I said, worst case, we come into this fib target, we come into 40, we get into this wedge formation, and then we set something else out, and that number here is coming in right at the end of September, more likely right after the Fed, whatever we get from that meeting. Yeah, one of the things that I see Chris is asking a question here, and I'll answer that, is one of the things that is forecasted out there, this is daily, is for yields to move up into this fib target range. But it doesn't look like it's being confirmed. Let's go to the weekly chart here real quick. We don't have any big weekly targets here, but we do have a move for 440, 450 range. Anything's likely, but it looks like all the algos want to flatten out. So I think these, where I have the cursor around 4.25, like I just showed you, a little more extreme on the downside on the short term, little bounces in, but I think you stay, probably if you split the difference here, 410 is the number I just talked about. That's probably your extreme, at least for the as we come into year end, we're probably going to stay at least above that 21 period moving average. We'll see. I may change my mind on that, but it looks like that's exactly what should happen there. Let's go ahead and take a quick look at the 2-year, and then I'm trying to keep the clock running here. We're at 44 minutes, so boy, every time I think I'm going to get through stuff fast, it doesn't happen. Yeah, the 2-year, as I've talked about before, is trying to round out here, and looks like stable. And then as we come into year end, it does look like yields are at least being forecast. We'll see what it looks like a little ways beyond there, but I think stability across the board, probably in this range of the 21. This is a weekly chart, so we're likely to stay up here, minimum 485. Maybe we see a little steepening in the curve. We'll talk about that when it's appropriate. All right, so blaze right along here. Crude oil still looks positive as the Saudis made very clear they're going to keep the foot off the gas, pun intended, and we're going to keep the supply tight, and off they go. I don't think they like Joe Biden anyway, even though I would make a little bit of a comment, like some of these deals that you see the Saudis and the U.S. getting into in Africa. I think they figured out all of a sudden, if you notice this will be a hidden gem in this stream, but if you notice, all of a sudden they're talking about these metal deals between Saudi and the U.S. They're just finding a way to absolutely trying to find the right word and not be too rude. We'll just say take advantage of the African people now that they figured out they have something they want. So it's very interesting to watch this world and watch the imperialist U.S. try to step in and take the stuff that isn't theirs. So being an American, I see things as they are, but it's very interesting from the standpoint of what you see these deals they're putting together, and yeah, I'll just leave it there. I don't want to go any further than that, but I feel like they're trying to take advantage of them. But the whole thing here with crude oil, higher prices right into year end, it looks like maybe a peak after that. That's what's being forecasted here. But what's interesting, if we go all the way over into November, that is what's being forecasted at PPM1 and PPM2 will start to roll over, otherwise lose momentum, not necessarily signal a downtrend. And, you're really, and I've talked about this before, getting into January, February, maybe there might be something there. Sticking with the weekly charts, we got gold up here, the Peter Schiff hour, we'll call it. Peter just can't get happy here because the algos are all suggesting lower prices here into probably the mid-October, and most likely that goes hand in hand with some of the forecast of steady to slightly higher interest rates as we come into that Fed meeting and maybe a little bit after into October. I think gold has just been locked in this range, so maybe it's fortunate it stays above this 40 period moving average that is rising in this pattern. But this is that, I'm just going to show you again, blow this up. If you look at this little wedge, this is a weekly gold, the upward slope on the 40-week moving average, which is at a trend mode, just below trend mode, 0.17, and the 21 period moving average above it, which right now is a minus 0.11. So you have upward sloping 40, downward sloping 1021 actually being forecasted. So we probably stay between those ranges. If we break down below this level much on this is a weekly chart, then we might be able to get a retest of the lows in August that would move us down to maybe the 1900, 1915 level, something like that. It doesn't look disastrous. It looks more like one of these choppy markets that's being forecasted going forward, just looking at the weekly charts from that standpoint. I did show you the monthly chart the other day, and it's very negative looking. So we'll see whether the long-term intermediate trends, who wins that battle. All right, so Bitcoin, and then I will circle back. We're about 50 minutes in, so we'll have a few minutes. We'll cover Tesla, maybe Apple, the big event tomorrow. So Bitcoin's trying to challenge some of these numbers I've been talking about. We're now trading just a bit below that 40 period moving average. Right now that's at 25,741, 25,127 last trade. There is two things to watch here. And this is a weekly Bitcoin. The first thing is going to be the market grid itself. Next level below where we are now, S2 24,952, S3 24,486, let's just call it 24,5, and then STX 24,000 even. We'll just round off these numbers. That would be the downward target, but I think the S3 will be about it. Now, if we look at the Fibonacci targets, it gets Fibonacci 1 has already been satisfied, 25,539, and then we have the Fib target 2 is way down at 23,1, and then Fib target 3 is 21,659 or 700. We're trying, the one thing that's driving this, which is interesting on the dailies, is that we're getting this downward slope here on the 10, and we've broken out of that little wedge that's being formed by the 40 and 21 pattern that was just showing you in gold. So this pattern's starting to break down, so it appears to be more risk coming into play here. All right, so let's go ahead and do what I said. Let's bring up Tesla. This is weekly. I was looking at this just a little bit. It's interesting because we're still getting, I guess from the standpoint they were able to pump it up pretty good on this event today, but we have new Fibonacci targets on the upside here that are being generated on Tesla. Originally, it looked like I was talking about just, I think I covered this last week as well. We got down to almost to this 21 period moving average on a weekly chart. That number's 225. We printed 235. Obviously, next couple of weeks after that, we got a bit of a reversal. Now we're trading at the moment. RTX is 268. We're trading, we've printed 274. We're at 273. It is Tuesday, okay? So if we close above that RTX number, that will be something to watch, because I would tell you that I'm going to show you something here, is Tesla has a history of printing these RTX sell signals and it meaning something. And we had one over here in January, and we had another one here. We actually still had a higher prices, but we drifted sideways in the market grid. And sometimes when you get the RTX, and I've told you about this before, you don't necessarily, the RTX sells are not as powerful as the STX buys from a, we'll call it reliability standpoint, but they usually signal at least 1 to 2 weeks, in this case weekly chart, of sideways movement. So if we do close up there, then probably a little consolidation doesn't invalidate these upward fib targets, which right now are some pretty insane numbers. You can see over in the green over here on the far right, 359, 415, 450. We've seen these kind of big print numbers in the past, and of course we never got there. So we'll find out if this is an island projection like it was right here. If you can see where my cursor is, there was an island projection back in April. And then right now, I'm questioning the validity of this fib target, mainly because the PPMs are looking like they're going to turn back down. So probably sideways forming, still consolidating here, even though you could extrapolate out all kinds of money and all the things that Tesla's gonna make and do with the dojo and all of that. But for right now, that's the case. Let's take a quick look at the daily, which I know already got the RTX sell signal. we popped today on the news, and just a couple of days ago, I think I covered this, and there was some vulnerability, but in news, that's the beauty of stocks and news, is you get it. But look at the algos on PPM1 are suggesting that this is probably a peak moment. So we have an RTX sell, so look for sideways for the next couple of days. And maybe we can talk about it on Wednesday night when I get back. All right, let's do Apple. And this is going to be it for tonight. This will be final. So we saw that big drop on the China. No one in China is going to buy iPhones anymore story. And so Apple came down, a little bit of recovery, but Apple still looks weak. And I talked about this. We have a new downward fib targets here. This is daily Apple, and the new fib targets is suggesting a hit on the 200. And somebody mentioned that I was talking about 163, 162. That's still a potential move, but there is one little pivot. I'm going to try to emphasize this, see if I can get it so you can see it easily. In fact, I'll draw in something just to make sure all of our eyes are looking at the same place. So right here is some green dots coming in. That is 180.21. If we close above that, then we're probably coming up to these upper averages. And on the and what's likely to happen when we're likely to get more of a potential of the market grid start to turn up. Maybe it sets up, the potential is for it to set up a little upward channel, and then we'll trade inside of this channel. That looks like a realistic. We have some downside here. This is one of these mixed situations, so I'll make this also a teaching moment. If you have the indicators, is that a lot of times you get, here we have a downward slope. We're getting the 10 period moving average to roll over, and then we've got the 21 actually accelerating. This is the red line in here. So the PPM suggesting that it wants to get back above that 21 period moving average, and that's fairly likely, and most likely getting into that wedge formation that I was just talking about. That's actually a real classical. If you look at when the markets start to converge and you get the moving averages start to cross over and converge on each other, watch the action. I've studied this for decades, is when you get into those type of patterns, you'll see that the market tends to stabilize in that range, and then typically we'll get some kind of formation that comes out of this that will be able to pick a direction, otherwise a larger move out of this pattern. So let's take a look real quick here at the weekly, and there's a giant wedge forming here, which would satisfy that downside action I'm talking about. On the weekly, we have a negative 0.61 on PPM1. Now that tells us, let's go ahead and let me turn something on here real quick. So right now, if I can get this, it says there's a 79% probability that we're going to stay under the 10-week moving average. So what is that value? That value is 183.83, and there's actually only a 55% to get over. This is a weekly chart now, that we're going to get back above the 21, which is 182. So that goes hand in hand with the daily analysis we were just talking about, 182, 183, those ranges. We should get a move back, and you can see the market grid's down pretty strong. PPM2, however, these are always tough points in time. So like I said, this is more of a teaching moment. You got PPM2 is below its first second derivative, but it's still in trend mode at 0.37. So what there is here is a upward slope. Let me draw this in very quickly. There's So we have this little pattern. We have the 21 is crawling through here, and then we have the 10 looks like it wants to cut through, although even it is trying to turn up in the pattern, but the 21 is decreasing, 40's starting to roll. All that's telling you is this momentum and this angle of attack here is slowing down. It's still a valid trend. What normally will happen is we'll start to get into that wedge formation, and we'll probably get some kind of formation. I think this 40-week moving average is strong enough. There's actually says 74% probability to stay above it. I realize it's quite a ways below that number where we're at right now. So it's not really in play at the moment. It's at all the way down at 166, but it's certainly, as it slopes up, somewhere between that 165, 166, maybe even 170, because this number is advancing as we go through the pattern. Those end up to be your downward slope. And probably, and I've talked about this before, when you get into this type of mode, these are probably really good times to do straddles, do some giant spreads, as sell the calls, sell the puts on a very large range, and you're likely to stay. I mean, if you find trades that would fit within these wedges, especially when they're big enough, this is on a weekly trade, you can do that. And if you own the stock in the middle, you're even better, because you have somewhat of a minimal risk on the whole pattern. So that's something to consider when you're looking at these type of patterns here. Okay, folks, that'll do it. We managed to get to 1 hour and 3 minutes. So it took me longer to get through things. And I always think I'm going to get through it. Sometimes I do. I've done 35 minutes, but there was plenty to review tonight. So once again, I will not be here tomorrow night. And I wish we had a best of reel that we could play on a premiere so you folks could hang out and talk. I know a lot of you enjoy doing that. I wish I had time just to like do a stream and we just interact. And I did one, and maybe we'll do something like this again and sometime in the near future, where I'll just do a Twitter space, and then folks can ask questions, and I'll just be doing simultaneously. And then when I do a Q&A, you can come in and talk. I really enjoyed the last time we did that. So that might be something we can do as well. Anyway, folks, as always, thank you so much for being part of the channel. Get the indicators. If you previously bought them, the discounts are gone if you didn't buy them. But please make sure that you get that discount. And it's a pretty deep discount, you'll see when you go there. So I really hope everybody takes advantage of that. And that's for the customer loyalty if you bought the first one. So I'll just rattle on for just one more minute. At the end, we've got enough people, spread the word. I am going to be doing a symposium. I'm still working on the agenda right now, which will be fairly in-depth, almost a master class, and going through a lot of the indicators and things that I use. That will be part of it. To get the ticket, to get in the golden ticket, to get in, you're going to have the indicators. And I will probably package together if you don't have them, so you can get in the door reasonably easily at that point in time. And then I would just tell you the other thing, and we talked about it a few weeks ago, but we do have a affiliate program that we're working on a couple things that we need to do before we can officially launch it. But so like I said before, we probably just won't open the door to everyone, but we would If we did get a number of names of you that said you were interested in participating in that, and I think it's going to be really an interesting program going forward. So thanks again, folks. Won't see you tomorrow night. We'll see you on Wednesday night. As always, thanks for watching. Thanks for being part of the community. Thank you for the business and the faith you have in my work. I appreciate it. Have a great evening. Have a good day trading tomorrow. See you on Wednesday night.